Once again, we're looking at the Digget Shovels case, which again can be found at the bottom of this video. And we are going to look at periodic Lifo, which is probably the most important one in this bunch, and that's why I saved it to last, because the best ones always come last, right? So again, we're under a periodic system. What do we know? Well, we only record our cost of goods sold once we hit a stopping point at the end of the period. So I'm going to go ahead and record my sales numbers. Just like always, they're the accounts receivable and the sales. And for the first sale, it was 70 units at $40 a piece. And for the second sale, it was 80 units at $40 a piece. So that was the 2,800 and the 3,200. And that hasn't changed with regard to any of the methods we've looked at. Now, at the end of the period now, and again, we're ignoring this hypothetical purchase number 4. We're going to do a look back. So we're at the end of the period, and we're going to do a look back. And in this case, under Lifo, because we know we're at the end of the period, we'll do the look back, but under Lifo, we're not going to look at the top of the list. We're going to assume the most recent ones were purchased. The last in, first out are the ones that we're going to sell. So which ones were sold? Well, we sold a total of 150. So once I get this all totaled up, we have to equal 150. So I sold 35 at 24. So I sold all of that layer. I sold all of the 100 layer at 20. So that's 2,000. Okay, so I've now sold, I've assumed that I've sold 135. I need another 15 more, and I'm going to pull that from this $18 layer. Okay, and that's 270. So if I look at it from this approach, I'm going to calculate my cost of goods sold as 3110. And this is what I would label A. This is the cost of goods sold approach to looking at this. Okay? And that's one way to look at it. And I think this is actually the most illustrative or illustrative of the whole Lifo case, because we're assuming that these oldest ones are being sold, and the ones that are going to remain on the books are these ones in the beginning. So you can see, like we talked about in class, where we talked about the Cadillac dealership, and they had these really old cars. You can see if we're always just selling the most recent ones we purchased, it's very rare that we may ever dip down into this layer, and this beginning inventory layer could be years and years old. Okay, so we looked at it from the cost of goods sold approach, and this is cost of goods sold without 4, right? Without number 4. Let's look at this now. Let's look at this from a different approach. Looks at it from the inventory approach. I don't know what the heck I'm talking about here. The ending inventory approach. And this again was without number 4. Okay, well, what happened? Well, I sold 15 of these. If I sold 15 of these, how many do I have left? I have, I believe, 35. So if I'm going to look at this from an ending inventory approach, I have 35 units at $18 a piece, which is 630. And then I have another 130 units at $15 a piece. So I have in my inventory $2,580. And that's 165 ensilage forks. Okay? All right. So that's that. And let me do one last little piece here. Let me look at the purchases. Let me look at the purchases. Let me put that right here. Let's call that C. And let's call this the purchases. And so what were our purchases for the year? Well, if we had the 900, the 2,000, and the 840. So we had the 900, the 2,000, and the 840. And if I add all those up, just like before, they are $3,740 in purchases. So if I'm going to do my year-end journal entry, it would be inventory, and this would be the ending number. And would we calculate that as 2,580? Our inventory beginning number is 1,950. Our purchases were 3,740. So my cost of goods sold, the number that makes this balance is $3,110. And I believe that all balances now. That's an 8, by the way. Okay, so this journal entry balance, so this is the journal entry we would make under periodic LIFO. Now, so I'm going to go ahead and take these numbers and I'm going to close this, and we're going to drop down and open up this, and let's drop what we know in here now. These are without number 4. So here's our cost of goods sold without number 4, and let's change our color one more time. Let's purple. Purple's such a nice color. So cost of goods sold, got to look at it. 3,110. That's my cost of goods sold without number 4. We did do the inventory, and the ending inventory we calculated was 2,580. Let's do I need to close this down. We need to go up and look at the income number. So the sales number again was going to be 6,000. Sales are going to be 6,000. If our costs of goods sold are 3,110. So if I subtract that number is going to be $2,890, and that's my gross profit. And again, this is without number 4. And so we know what my gross profit is. It is 2,890. So you can see that my gross profit under the periodic LIFO in a period of rising prices is the lowest of them all, because we're always looking to the oldest unit sold. All right, so let's go back, and now let's look at what happens when we put in unit number 4. It doesn't matter when the sales happened. We're going to start at the very ending period. So we're going to start here and do our look back. We still only sold 150, but now we're going to assume that the 60 units at $30 were sold. And they were the first ones sold. We're then going to sell the other 35 units at $24, and that's 840. And then we're going to sell we're going to sell 55 of these units, of the $20 units, at so that gives us 1,100. So our cost of goods sold in this case with the sale is 3,740. And so if I fix this here, I still have now, I go ahead and I have that full 50 right there. But now what happens is part of these are gone. 55 of these units are gone. And so I only have 45 left. Okay. I'm also going to have to add a number here to my purchases. So my purchases went from 3,740 now to 5,540. Okay, because I'm going to add that into my purchases. So if I'm going to look at my income statement, so the income statement with number 4, I'm going to have the sales numbers not going to change. The sales number is still going to be 6,000. The cost of goods sold is now 3,740. So in this case, my gross profit is going to be $2,260. Okay, so that changes things up a little bit. Let's block these off so we can see if there's anything left we want to compute on this page. And I guess the only thing I would probably want to compute is how much I have in ending inventory. And in this case, what actually happens is now I have these other, what would happen? Well, let me go ahead and let me just erase. Well, I hate to erase. I'm going to anyway, because I'm going to run out of room. I don't have, now if I go back and look here, so what units do I have in inventory? I have all 130 at 15. I have all those 50 units. I have all 50 at 18. And now I have 45 at 20. And those 45 at 20 are an additional 900. So if I add all that up, that now my ending inventory is 3,750. Okay, so let's then take some of these numbers and post them to our grid. And I've already forgotten these numbers in our grid. So our ending inventory, we still like purple. No, let's change to it. Let's change to green. So inventory with the purchase is 3,750, and that's my ending inventory with number 4. My cost of goods sold with number 4 is 3,740, and I got to jump back up here and look at here and see what my income was. 2,260. So my income now, my gross profit is 2,260. So you can see that my gross profit under periodic LIFO in a period of rising prices is the lowest. So I'm actually, the reason you do this, you choose LIFO is to pay the lowest amount of taxes that you can, and you can see that it has that effect. Again, just remember, we're actually making a purchase after the very last sale of the year, and it is impacting our net income. Think how powerful this is. Companies, just by having this method, can choose to make purchases at year end or choose not to make purchases at year end, and that choice affects your net income. It provides a huge benefit. It's a huge benefit to manipulate income. You can really, really manage, and maybe manipulate's too strong a word. Let's say manage income. It's so much better. You want to manage your partner in your marriage. You don't want to manipulate them. So it's a huge benefit in managing your income, right? So that's why we see any company that uses the LIFO method, it uses LIFO periodic. And that is the end of the Digget series of cases looking at perpetual and periodic, FIFO and LIFO.